Good morning, everybody, and welcome to this week's weekly analysis session, Monday, the 7th of December 2015. Getting close to the end of the year. I was just having a bit of a look at where we've gone as a market and whether or not whether we can get any follow through on the back of what happened on the US markets over the course of the weekend, and whether we can get back to square for the overall index. We'll just have to wait and see, won't we? We'll keep our fingers crossed for the broader market to do so. All right. The disclaimer. First and foremost, the content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. So before making an investing decision based on the general advice presented in any of our presentations, please consider whether the advice is appropriate in light of your financial circumstances. All right, let's go through again. We'll have a look at portfolio management. We'll have a look at see what's happening on both the markets. Look at some specific setups. I couldn't find any actually this week in the Australian market, and there were only a few in the US. We'll go through and have a look at some trailed stops. There are a number of those, and some stop outs. There weren't any of those in the portfolios, but there was certainly quite a number of triggered trades from the previous week in the US in particular. Then we'll go through and have a look at some Q&A as well. Just a reminder what's happening on the markets at the moment. The ASX 200 remains in very high risk, as such, using a 20% market risk multiplier. The US, by comparison, right on the cusp of being low risk once again. The market there is obviously moves up and down a fair bit, and of recent times we had been in low risk, and then no sooner did we get into low risk, we dipped down into moderate, and then just recently with a strong close on Friday, the market is very, very close to being in low risk there. But for the time being, we still need to apply a 80% market risk multiplier. Assuming you're splitting your portfolio between the two markets, then if you're allowing yourself a maximum of 15% maximum drawdown, then you allocate half of that. So that is 7.5% to the Australian portfolio. And because we're in very high market risk, we therefore need to apply that 20% multiplier, meaning that you can only have 1.5% value at risk as a total percentage across your portfolio allocated to the Australian markets. By comparison, the US there, the other 7.5% of your value at risk, we're applying an 80% market risk multiplier to, and therefore that means 6% of your overall value at risk can be allocated to the US markets. Hopefully by now everybody's understanding that, but as always, if you've got any questions or anything like that, or you need some help, you know what to do. Request a coaching call and we'll talk you through it. Just to recap, if you haven't caught up on Friday's macroeconomics session, it's available there in the portal for you. Last week, we just ran a brief session on different types of orders and how you might use those in the markets. Not everybody will be using exactly all those types of orders, but I think it makes sense to familiarise yourself with the various types of orders and understanding whether your platform actually allows you to place those orders. I did send out an email last week, and thank you to everybody who has responded. In the new year, what we will do is we will actually split up the analysis sessions into two parts. We'll do one of a Friday afternoon as soon as the market close and we get our Beyond Charts data updated. So that'll be after 4:30 when the data comes through. So I'll schedule a webinar for around about 4:45, and that should take around about 15 minutes thereabouts. So that will all be recorded so that people who can't attend at that time can watch it over the course of the weekend, and obviously with the updated watch list. And then on Monday afternoon, I will also run a early afternoon webinar on the US markets, and again that will be recorded as well, so everybody can watch that prior to the open on Monday evenings. So thank you very much to all those people who have responded. I've tried to get back to everybody. There was a few emails that came in over the course of the weekend, and I will respond to those first thing this morning. All right, let's go through and have a look at our markets, our market risk. as we always do, every time we're doing our analysis, making sure that we're understanding what the market's doing at any particular point in time. So it's a little bit like a weather check, a reading of the barometer to assess the market risk. And as you can see there, in the XJO, the ASX 200, you'll see there that we are still in very high market risk at the moment with our worm, our stochastic, really over a period of time, really struggling to get back up. I think probably with this week, if we can get some follow through, then I reckon that'll just about drag that up into high risk, which sounds a bit strange, but improving to high risk from very high risk with a touch of luck there. Certainly needs to follow through on what the US market has been doing. If we go through and have a little bit of a look at that. In fact, what we might do just on here, I'll just put on a horizontal line so we can just get a bit of an idea as to where we started off at the beginning of the year. Again, I think it makes sense to go through and just pause from time to time. So that was there, that's that candle there, so we'll just move that up a little bit. So pretty close to the 5,400 mark, roughly, is where we began at the beginning of the year. Really jumped out of the blocks very quickly, very strong performance. And then since, what was that, May, it's just sort of been one continual downward move. And it's really interesting because the stocks that have come up and been in the ASX watch list have really, by and large, had very good relative strength and held up really, really well despite this overall market decline. And it's interesting to note of late that some that have been in there have just started to move on and start to outperform the benchmark a little bit as well. So certainly the relative strength aspect is really key to stock selection. All right, so let's go through and have a look at the US market. By comparison, you'll note this is our longer term moving average, that we're well clear of that now. We've come back down and we've tested it, and this was an old previous point of demand, an old support level from early on, which at one stage was acting as a point of supply on a couple of instances. Now turning around, if you like, the polarity almost changing, now starting to act as points of demand. A really strong candle there on Friday's close, and you'll see our stochastic there, 79.54. Well, it's only got a little bit to go to tick over to 80, and we'll be in low risk as well. And certainly the volatility in the market over there has started to subside a little bit. Having said that, certainly their stock specific volatility is generally a fair bit larger than what you experience in the Australian markets. All right, so let's go through in the Australian market. I didn't find any new trades this week in the Australian market. In the US, I found three that I'll add to the watch list, so we'll go through and have a look at those ones. Now, in no particular order, the first one was Texas Instruments, TXN. So I'll just bring up my profile a little bit here. Let's just zoom out and see where we are. Well, certainly the all-time highs of this particular stock way back in the late 90s, .com type of movement there before moving down. And that really is a very, very long time ago now, 2015 years ago. So certainly, you know, even if we go through there and have a bit of a look, looking for long-term peaks, etc., the last significant long-term peak all those years ago was, you know, way back up at $100. So certainly that's an eternity ago, and certainly a long way away from where we need to be at this point in time. So what we might do is just go through and have a look at the setup and just zoom in a little bit. Now let's just dissect what's been going on. Obviously, of more recent times, the stock's been moving downwards through the earlier part of the year. But then since around about September has really started to outperform, and you'll see that the longer term outperformance, whilst it was still moving towards the downside, still managed to keep its head just above on the longer term. In actual fact, that's down the bottom there. I'm going to change that over, folks, because you'll see there on that overlay that RS relative strength comparison has the ASX 200. So what I will do is I'll go through, I'll discuss this as the as the setup, because it came through on the scan, obviously looking by comparison with the US. Something's gone astray with my overlay there. So what I'll do before I go and apply the other overlay, because I may well lose my numbers, let's go through the numbers in any case. So first of all, checking if our price action is the last trough at or above the second from last medium term peak. Well, there's the last medium term peak, there's a second from last, so well clear of that, exhibiting very strong demand pressures. There is a long-term peak up here where prices come up. It's already had a first test. Now remember, a first test means it has to come within 1% of that particular level. It's had its first test. It's had a nice shallow retracement. All we've got to do is break that last medium-term peak. So the on-stop order there is at $59.96. And if you want to put a limit on that, then the easiest way to do that is just have a limit 0.5% above that particular level. Your protective stop, remember, has to be at least 2 ATRs from your entry point, and also must be at least 0.5% below that last medium-term trough. So that protective stop comes in at $54.67. What I will do is I'll swap over to the US overlay. That one there has got ASX, so it's something there. I'm going to remove that. Yes, I do want to remove that. Let's pop that one on. See how we go there. There we go. That's a little bit better. But as you see, I've lost my the previous analyses that I had on there. So I will certainly fix that up and put that into the into my watch list for next week, so I can watch that and see whether that gets triggered or not. Let's go through the next one. Same things happened here, SYKE, so we'll do exactly the same thing as we did previously. Let's just zoom out and see where we are. In terms of long-term peaks that we need to be mindful of, or significant peaks, we're really looking up beyond $50. So there's lots of room between where the current price is on this one. And because it did come up on the scan, it's just that the overlay here with those relative strength comparisons is incorrect for the moment. So let's just go through the price action again. Price action filter, last trough, well clear of the second from last medium term peak. We just need to break through our last medium term peak for the order to be triggered. So the on-stop order is at $33.16. That's 0.5% above that last medium term peak. That protective stop coming in at $29.75, and again that's outside of 2 ATRs, but it's also at least 0.5% below that last medium term trough. That's SYKE. And let's go through and just check out the relative strength, and you can see relative strength been increasing consistently over the medium term, the longer term and the short term as well. Good strong candles last week. These are effectively bullish candles, these ones through here. So looking really good. We've just got to clear that last medium term peak. The next one on the list, I think this was the last of those in the US, and you'll see that I'll need to update that overlay as well. The analysis that I've done on that. Let's zoom out and see where we are. We're at all-time highs, so certainly a good sign for this particular stock. Certainly these key levels we've been able to work our way through. Interesting that, just looking at this, we've broken above these key levels and we've come back and we've retested. So very, very common that you get that type of price action. Certainly a big gap up here, obviously to do with some earnings there, moving up very strongly. By comparison, having a little bit of a retracement and then finding some strength last week. So we really just, in that particular instance, just need to break through that last medium-term peak. Last trough, well clear of second from last medium-term peak all the way down here. So the structure for the order on this one is on stop at 31.39. That's 0.5% above that last medium-term peak. Protective stop coming in at $28.20. That's outside of 2 ATRs and at least 0.5% below that last medium-term trough. I'll just go through and put on there the US one. And as you can see, for a period of time, we might just sort of zoom out there, just have a bit of a look. Whilst transitioning sideways there, you can see by comparison that it was underperforming. but recently it's just started to swing up and move quite considerably against the rest of the market. So obviously some good news about that stock, and breaking out, retracing, and starting to move onwards and upwards. Folks, I'll just hand it over to you for the time being, just to see whether you managed to find any new setups in the US. There's certainly quite a number of trades that were triggered last week, so we'll go through and have a look at those. We'll also go through and have a look at some of the trailed stops across both the watch lists as well. If you haven't got any, that's okay. There wasn't a lot of outputs from the scans over the course of the weekend. I think even in the US, the output only had around about 100, which typically means that I'm going to get probably half a dozen setups from that, maybe up to 10, and then by the time you go through and apply all the relevant filters and things like that, then certainly it cuts it down quite significantly. BSX, although missed out by 2 pips for good price action for last trough being at or above second from last peak, it still looks very positive. Yep, I agree, Kim. I think that was one that I had a look at recently, and I'm not too sure whether it might be still in the pending list or not, but let's have a look. BSX. I'll just bring him up. Come on, be on charts. Yeah, sometimes you get setups where that last trough at or above the second from last peak, and you can see I was having a bit of a look at this, and look, it's very, very close. That last trough there, as Kim was saying, within a couple of pips of that second from last medium-term peak. Yeah, it looks really good in terms of where it is. There's lots of room above until we get to significant points of supply overhead. So lots of room, and certainly of late, relative strength been consistently above on the longer term, medium term for a considerable amount of time. Short term, a little bit of weakness through sort of August, September time, but just recently starting to put some nice moves on. It's just got to break that through that last medium term peak. So certainly, other than the price action filter, ticking all the other boxes. All right, so what I might do now is we'll go through and just have a look at all those trades that triggered last week. So they are now in the opens list. So I'm just going to go through and have a look at a few of these. AHL, just in case some of you are in these. It's always good to see, what happens with stocks once they've been in the watch list, what sort of candles they've triggered on. And just last week, triggering quite nicely, pin bar candle there. So look, certainly showing lots of good demand there, finishing the week off nice and strongly, and triggering us into that one. That was AHL. BXS. Similar to the one we looked at before, but that was BSX. That one triggered in, not quite as good. Obviously, we've been nicked into that one, but still short-term uptrend moving. We've got a higher high and a higher low, so just short-term stagnation, but still short-term uptrend. Hopefully that gets a little bit of a kick along, but that was one that triggered. Another one, CACI. Triggered last week, and I must apologise for not being available last week. I got caught in Brisbane with some fairly ferocious storms up there and had to stay the night in Brisbane town. CACI been triggered in there last week as well. CBU, Community Bank, again triggering earlier in the week, coming back down. Very much a doji there, a bit indecisive, but certainly, in terms of recent performance, still looking okay. DPS was another one. Dr. Pepper Schnappel. This is one that's actually been, outperforming for a long, long time, and you can see. I know some of you have had this stock previously, and hopefully you've still got it, because there's nothing by way of trade management that says that you should be out of this stock. So you could certainly have had a beautiful ride on this stock if you had picked it up anywhere along previously. Setting up again, a really nice price action, and last week just triggering with a really strong candle, so that's looking really good. Dr. Pepper Snapple, eBay. Just reminds me, I've just put something on eBay to sell over the course of the weekend. There we go, eBay just been nicked in by a little bit. You'll see there 29.09 was the high. 29.09, I'll have to check that, because that doesn't look like it has triggered in. Although 29.83, sorry, looking at the wrong bit. I was looking at the open, not the high. The high there, 29.83, and the on-stop order, 29.83. So if that was an order in the market, the price would have hit that level and your order would have been triggered. That's eBay. LANC was another one that triggered. So I'll go through and have a look at that one. And last week the high there, 113.67, just passing the 113.04, so that one's been triggered. OVTI was also triggered, and again just nicking in there. The high there, 29.48, 29.38 on OVTI. SMG, Scott's Miracle-Gro. I reckon they must produce fertilisers and that sort of thing. It sounds like it. Last week, the high, 70.88, just triggering in, past 70.80. SNA. Another one. It's interesting when you go through these and just having a look at, longer term relative strength along the way, and just getting a bit of a feel for, those stocks that, have been able to exhibit that for a long period of time. It really sort of does tell you a bit about the makeup of the stock. And last week triggering in with, again, a nice candle there as well. So that was SNA. LUV. Again, a couple of years ago, the airlines in particular in the US had a very, very good run. Triggering in, really nice strong candle there. If we just go out and have a bit of a look at some of the movement through 2012 in particular, very, very strong, very steady, really getting a nice run. And again, not too volatile a trend, and it just continues to plug away and move onwards and upwards. And that's when your trend following works very, very well. Really nice candle last week, so that probably the star for last week. SIX, another one that triggered in, and again just ever so close. 53.59, and the entry there 53.58. So certainly just triggering in by 1 pip there. I've got the circle of death there. I'll just make sure that my computer's, it seems to be going all right now. So SIX, X-Ray was another one. Nice strong candle last week as well. So looking very, very good. That's X-Ray, or Dentsply is the company name. And they supply a lot of equipment for dental practices, etc. Costco, COST, last week also triggered. And again, nice candle last week, looking very strong. And interesting, isn't it, to see a stock, that moves up nicely, has a period of consolidation, moves up, and again, a lot of volatility through the August, September time, rebounding nice and strongly, setting up again, finding those old supply levels, those old points of supply, now acting as future points of demand, good price action, and moving it along very, very strongly. You will note that this is not a typical type of setup that we would traditionally look at, because this big white candle here has already broken through the last medium-term peak. So we did say, look, if that happens, providing you can still structure a sensible trade setup, then I don't see any reason why not to get into trades like that. I've seen lots and lots of examples where, whilst it has broken past that last medium term peak, and normally you would say, well, look, I want to take a breakout, structuring a trade where you can clearly manage your risk on it, I don't see any problem with that, particularly given its longer term outlook as well. So that was Costco CLX, which has been in the watch list earlier in the year. Was one that triggered from last week, and again, nice price action, really nice candle triggering through there earlier in the year. This one got triggered in. I'm just trying to think. Was fairly early on. I think it was through here, and by virtue of the stop placement, or the original stop placement, I think it ended up getting kicked out somewhere through here. And that was obviously before moving to the broader 3 ATR based trading methodology. So again, if you had used the 3 ATR methodology from the get-go, you'd still be in it and be up plenty on that particular trade. Really nice candle last week as well, so that was a good one. MCD, McDonald's. Having a good week, nice candle last week, and again, if we just sort of zoom out and see what's happened, it's had a long period there where it's been, pretty much a long basing sideways sort of pattern, and it really wasn't much of a clue that this one was ready to move out, other than a series of white candles. But typically what you will see on the way up is a series of progressively higher troughs. Didn't see any of that, but importantly, once it did break out, it came back and retested. Again, very typical sort of a manoeuvre, and moving up really strongly last week. That looks really good. And the last one that I had triggered from the watch list was CB, Chubb Corporation. I'll just have a look at that one again as well. Just sort of zooming out a little bit. All-time highs. Coming back. The old point of supply through here. Obviously something to do with earnings, or something fundamental. Obviously that big candle there. A little bit of a point of supply there that it's now worked its way through, and now starting to act as points of demand, and just triggering last week as well. That's CB. Trailed stops. Those stocks that had trailed stops last week. HRL. Hopefully some of you managed to get into this one a couple of weeks ago. It's been very, very strong. Nice candle. Once we got triggered into that one, and last week's follow-up candle as well, performing really well. Kim says, kicking myself that I didn't have HRL. As a non-stop a couple of weeks ago, so I had to make a choice between it and AUK, American Water, and the time. It sometimes happens, doesn't it? I guess that's the thing, having a number of stocks in your portfolio. You're hoping that somewhere in there you get a couple of stocks that trigger in nicely, or at least if they don't trigger in nicely, go on to do a lot of heavy lifting for your portfolio. Ken says the problem last week was picking the best of the best. There were so many setups last week, absolutely horrendous. In terms of going through, doing the watch list, etc. There were literally, in excess of about 35 different stocks to go through and have a look at, and certainly you can't trade all of them. And the purpose of just putting them in there is really just to continually demonstrate the setups using the price action, and more importantly than your actual entries is management of positions. And so at least by having a broad watch list, being able to look through lots and lots and lots of trades, you'll get to see a bit of a history of particularly if you go through and have a look at the watch list, and you'll see all those stocks where they've had trailed stops, and hopefully that will help you to remember and build confidence about the trailing of stops and how it's absolutely critical if you're going to make money over the longer term. NVR was the next one. I keep talking about from developmental side of things. One of the first challenges that you face as a trader, having to do it all yourself, is getting used to the idea of cutting your losses short. You might go through periods where you have several losses in a row and it doesn't feel all that good, but it's very important that you maintain that particular outlook and remain disciplined and focused. But on the other side of the ledger, and this is where the next stage of your development needs to improve, and that is having faith and letting your profits run, because you can't cut your losses short and at the same time cut your profits short as well. It just doesn't work, and you will never, ever, ever make any money. So that's certainly something most people need to work on. MKTX was another one. So we'll go through there, and again, it's taken a while for this stock after triggering in quite a while ago, a long time ago, through here. It's taken a long time for this thing to start moving, but eventually it has. So from an initial entry of around about $90, it's sitting up there at around about 113, 114 at the moment. Last week's candle just pulling that trailing 3 ATR up in the right side. Even though it has been going sideways, still interesting that it outperforming the broader market over those longer term time frames by and large. That's MKTX. EXR. Again, triggering in some... where were we? When was that one? That was triggered in through here. That was our triggering candle. So we've been in this one for, about 6 or 7 weeks now. Triggering in, having a bit of a retracement, starting to move up again and again as a result. Last week's candle having a higher close, and as a result dragging that 3 ATR up as well, so reducing the value at risk on that one. And the other one in there, Casey, was also one in which we trailed the stops. In the US as well, we might go across and have a look in the Australian portfolio at the moment. Interesting, isn't it, how volatile CZZ has been, and yet it's still been able to maintain above that 3 ATR. But certainly not without its ups and downs. So the trailed stops in the in the Australian market had AHD. Not too sure if any of you are in that. Again, just moving along very, very nicely. Had a period of sideways movement. So again, just being patient, and since then it's just really started to move along. Really good outperformance, looking really, really good. Ken, hopefully you've got AHD. We'll stay in it if you're in it. That's not financial advice, it's just telling you to follow your trading plan. ARB. And again, a lot of sideways movement, testing your patience, but last few weeks has really started to put in those higher troughs, moving upwards, starting to look a whole lot stronger now. ARB. BLA. Nice candle last week, and just dragging that 3 ATR up a little bit as well. That was BLA. And CKF. Not Kentucky Fried Chicken, although they do run the Kentucky Fried Chicken stores. Great big candle last week. That was on the back of earnings as well. This is one that was originally identified by Jeff in the Elite Investors Club. Certainly it didn't have the price action that we would want at that particular point in time. Last week certainly did, and really nice candle last week. So obviously the market coming to realise that the stock itself has got some key attributes. So they were all the trailed stops. There weren't any stop outs last week. There were a couple of cancelled trades in the Australian market. BGA. I think I must have taken that out of the list purely because of price action. That's all. So I'll just bring that up to have a bit of a look. I thought Yum Brands did KFC. Not too sure. It might just be in the US there, Kim. But CKF, certainly in Australia, looks after those restaurants there. Bega here, you'll see last week we've just put in that lower medium-term peak, so it doesn't meet our price action filter. We want to have certainly rising troughs, and if we're going to take a breakout trade, then we want to have those rising peaks. But remembering that wherever this next trough forms, is that going to be at or above the second from last medium-term peak? Well, this is now the last medium-term peak. That's the second from last medium-term peak. So in terms of price action, that's just failing at the moment. That's Bega. And the other one in there, CGF, Challenger, just going through and same sort of thing. Just zoom in a little bit there so we can all see. You'll see here that we are in short-term downtrend. So once this short-term downtrend turns around and moves up wherever it's going to be, the trough, when it forms, that trough going to be at or above what is then going to be the second from last medium-term peak. So I'm referring to this one now, and no, it won't be. The low down here is already below this second from last medium-term peak. So just by virtue of the price action filter, I'm going to take that out of the watch list. So they were the cancelled ones in ASX, and as I said, I didn't have any. Yes, I did. I do have a few in the US, so we'll go through and have a look at some of those as well, just to tune the eye a little bit. CYT. Again, let's have a bit of a. That was one that I'd taken out of the watch list because of all these little candles, I think it was, and the fact that, that's right, back through here we had a trough that had formed, and that was, at that particular point in time, lower than the second from last medium-term peak. The other ones in the US, we had GPN, Global Payments. So that was, no, that can't have been it because that was already, no, scratch that one. That one should not be cancelled, absolutely not. ISBC, let's go to the next one, ISBC. This one was cancelled, and why was that one cancelled? That last trough at or above, that trough there is below the second from last medium-term peak. I'll have to go and have a look as to why, because that looks to me as though that was an existing trade. I think I've got the wrong list there. Let's have a look. We'll keep going. TSCA, Tractor Supply. No, can't remember, because they are not obviously new setups, so I'm not too sure why I have those ones in there. In fact, what I will do is I'll bring up the watch list and just have a quick look there. Is OSIS still in the watch list? Kim says can. I think it is. So let's go through and there we go. So that was trailed stop on Tractor Supply, and a few others there. So they were trailed stops as opposed to cancelled trades. That's all. Let's have a look. OSIS. There you go. There you go, Ken. It's still in there. Yes, absolutely. So that's still in the watch list there. By the way, with this watch list will be undergoing a revamp over the course of the next couple of weeks in preparation for the 2 sessions. So what you'll end up having is 2 separate watch lists, a US watch list and a Australian watch list. And the reason why I need to have that is obviously running the webinars of a Friday afternoon. I want to be able to update that, produce the watch list and send that out to you so that it's all ready over the course of the weekend. Then don't want to have to get that watch list and update it, etc. for Monday afternoon. So it'll be 2 separate watch lists, and if you're only trading one of the markets, then you only need to worry about downloading one of those. Certainly there's still quite a number of pending trades at this particular point in time. There are a couple of cancelled ones there, so I'll just read through those. I think that's where I've mucked up my my list there, getting confused with trailed stops as opposed to cancelled order. So NKE and NP, again the price action there not meeting the right criteria. There are a couple of others in there as well. Again the price action RHT, NOC, KMB, there, DPS, that's Dr. Pepper Snapper, that will need to go from there into the open list. DHR, again the price action, and from the previous week that we were having a look at ATR, again the price action aspects of it as well. So I'll just go through and just put in one of those. The rest of them you can go through and have a bit of a look at your leisure. But certainly important to understand, the sort of price action that we're specifically wanting. And again, you'll see that we've now formed a lower medium-term peak. So wherever this trough forms, that trough going to be at or above the second from last medium-term peak, which is now this one? It won't be. So it's now not validating our price action filter. So all those that are in the watch list, go through and have a look at those. And just acquaint yourself with that failing price action, or that weakening price action. All right, guys, any questions for this week? I'll have a look at OSIS there, Ken. Let's have a look. OSIS. Bring that one up and have a bit of a look. Okay, so it's had a strong candle there a little while ago. Certainly, has it had a price volume volatility? It has on that particular candle there. So that's where you need to weigh up what your reward is in terms of your initial risk. So that one there, getting a little bit more than 1-to-1 out of your initial setup for that particular stock on OSIS. Preferably, getting towards 2-to-1 to take those part profits. But certainly, look, you're at 1-to-1, that's okay. Certainly, you wouldn't want to be taking part profits at anything less than 1-to-1. So you've put a little bit of money, you've taken money out of the market. So that's not such a bad thing. The safest place for your money is in your account as opposed to in the market. So certainly taking some profits along the way makes sense. Just make sure that when you're taking them, that taking part profits, that is, that you are certainly well ahead of 1-to-1 as the barest of minimums. Okay. Right, well, look, if there's no other questions, thanks, Will. Will's just mentioning the results, clearly certainly better than those of short-term trading. So that's thanks for that feedback. And again, if you haven't provided feedback from the email that I sent out last week, just asking for some response in regards to the changing of time formats, please send through your thoughts. I will respond to each and every one that does that. I just like to keep everybody on the same page and in the loop. Right, folks, that's it for me. I'll produce an education session on Wednesday, and we'll catch up with you next Monday. Right, bye for now.